Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. My name is Rashonda, agency owner of the Isom Insurance Group, right here in the Sunshine State of Florida. Back again with another Quick Bite episode, your fast and informative insurance market update. Today is Wednesday, November the 5th, 2025, Hump Day. And we've got a major headline to unpack. Citizens Property Insurance, the state insurer of last resort, is no longer the largest property insurer in Florida. Yes, you heard that right. For the first time in years, private carriers have officially overtaken Citizens. And honestly, that's a headline I never thought I'll get a chance to see this soon. So here's what's happening. According to the article by William Raby in the Insurance Journal, Citizens' policy count dropped to about 560,000 policies after the latest round of takeouts in October. That number might sound big, but it's actually the lowest since early 2021, before the claims litigation crisis sent everything spiraling. Compare that to their peak in September 2023, when Citizens had about 1.3 million policies in force. That's a 40% reduction in just 2 years. And here's the kicker: Citizens didn't lose those policies to cancellations or homeowners dropping coverage. Nope. These policies were absorbed by the private insurance companies through Florida's Depopulation program. So, if Citizens isn't number one anymore, who is? Drum roll, please. According to the latest data, according to this article, State Farm Florida now holds roughly 646,000 policies, making them the largest property insurer in the state. Universal Property and Casualty, based out of Fort Lauderdale, comes in second with about 561,000 policies. And Citizens, once king of the castle, sits in third place at around 560,000. That might sound like a close race, but it's a big symbolic shift. For years, Citizens ballooned in size, and as private carriers pulled back. Now the tide is finally turning the other direction, and that's good news for Florida insurance market. Yes. Let's rewind a bit. Let's take it back down memory lane just a bit. Citizens was never meant to be Florida's biggest insurer. It was created as a safety net, the place homeowners could go when no private company would write their policy. So when Citizens, the point of Citizens again was to be that safety net for people, for homeowners that could not get coverage in the private market because they may have had several claims in the last 3 years. Their home was older and no updates were done to it. That was really the place where Citizens was created for those type of homes, to make sure they had coverage. But after years of lawsuits, reinsurance pressures, and a few rough hurricane seasons, private carriers either went insolvent or stopped writing new business altogether. Citizens grew by default, like that one friend who hosts every party because no one else would volunteer. That sounds like me. By 2023, Citizens had 1.3 million policies and was growing at a pace of 30,000 policies per month. That's when Florida's lawmakers said, okay, enough is enough, and passed a wave of reforms to stabilize the market. Those 2022 to 2023 reforms were a turning point. Yes, they were in the market. They curtailed one-way attorney fees, reformed assignment of benefits abuse, and introduced a more structured depopulation program. Basically, they told carriers, come back, it's safe now. and it's working. Citizen spokesperson even called the new numbers significant. In October alone, about 199,000 policies were assumed by private companies through the takeout program. That is huge. It's like moving half of Tampa's homeowners off Citizens in a single month. So let's talk about this takeout or depopulation process because it sounds confusing, but it's really just an insurance version of musical chairs. When private carriers feel stable enough to expand, they request approval from the Florida Office of Insurance Regulation to assume certain Citizens policies. Citizens then notifies those homeowners that a private insurer wants to take over their policy. However, homeowners can either accept the offer, moving back into the private market, or decline it, choosing to stay with Citizens. But here's the thing, more people are saying yes. And also, they put in a new rule, the 20% rule with depopulations, which means that, and this is just not with the depopulation process, it's also if you're trying to do a new policy with Citizens. The 20% rule means that if you can get coverage in the private market that's within 20% of the rate with Citizens, or the estimated renewal rate with Citizens, you're no longer eligible to stay with Citizens. You have to move to the private market. So if the Citizens rate comes back and the private market is within 20% or less of that Citizens rate, again, you're no longer eligible to stay with Citizens. So in the first half of this year, only about 200,000 out of the 1.2 million takeout offers were accepted. And I wouldn't use the word accepted. Again, if it was within that 20, those means that when the private market carriers submitted the offer to Citizens, a lot of times if the offer was over 20%, the customers were choosing to stay with Citizens because they did not have to move. So they had a choice. But in October, that number shot up out, roughly 368 offers, over half were accepted. That means confidence in private carriers is growing and fast. I would also say that it means that the private carriers market, their rates have dropped because now those rates are coming back. When they're sending the offer to Citizens, it's within 20% or less of the Citizens estimated renewal. So the customer no longer has a choice. So they are getting pushed out to the private market. Unlike the customers that their offer is, if it's 20% or more, they get to choose whether they stay with Citizens or go to the private market. So a lot of those, more so of the offers that I've seen come down, have been 20% or less. So the customer doesn't even have a choice. The two biggest players in October's depopulation round were Slide and Manatee Insurance Exchange. Slide is based in Tampa and has been aggressively taking out Citizens policies since 2023. Manatee, a new reciprocal exchange, is also stepping in strong, giving homeowners another private option. Think of it this way: Citizens is the public bus, reliable but not meant for long-term travel. Whereas Slide and Manatee is like Uber XL, showing up to take you directly to your stop, still insured, but now you've got choices. The shrinking size of Citizens is more than just a headline. It's a sign of a stabilizing market. When Citizens policy count goes down, it means more Floridians are finding affordable coverage from private carriers. And that's exactly what we want. Smaller Citizens exposure also protects the entire state from massive taxpayer backed losses if we got hit by another big storm. And it aligns with other encouraging news. Just this week, I just talked about this on Monday. Security First announced an 8% statewide decrease, and other carriers are cutting rates for the auto in the market as well. That combination, fewer Citizens policies and rate decreases, is something we haven't seen in years. So, what does this all mean if you're watching at home thinking, okay, but how does this actually help me? First, if you're insured with Citizens right now, don't panic, but do stay informed. Watch your mailbox. If you're set up for paperless, watch for any alerts letting you know that you may have gotten a depopulation letter and a depopulation offer. If you receive a takeout offer, read it carefully. Sometimes the private carrier's rate might be a little higher. Remember the 20% rule, but the coverage options and claim service could be better in the long run. Second, watch for your renewal notices because the market is shifting quickly. Some carriers that weren't writing at all in 2022 are now expanding again. And finally, celebrate this as a win for Florida. A smaller Citizens means the market is healing, and that's good for everyone's long-term stability. I'll be honest, a couple of years ago, when Citizens hit that 1.3 million policy mark, a lot of us in the industry were nervous. But what we're seeing now shows that the reforms actually worked. It doesn't mean everything's perfect. Rates are still high for many homeowners, and we're still seeing challenges when the next storm season hits. But we're headed in the right direction. I like to say the Florida insurance market is kind of like your roof after a hurricane. It's patched, reinforced, and not brand new yet, but at least it's not leaking anymore. If you found this quick bite helpful, please like the video, share it with friends, and drop comments below with any insurance questions you'll like for me to cover in a future episode. And don't forget, a new Quick Bite episode drops Monday through Friday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional about your unique situation. I do appreciate you for watching. This is Rashonda with the Isom Insurance Group here in sunny Florida. Thank you for watching again, and I'll see you next time. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.